This is Christopher Lewis from the dailyforex.com trading desk, taking a look at the upcoming March 20th Forex session. Pair in front of you is the euro dollar. As you can see, we've had a little bit of a run, a bounce, if you will, from the 130 level, which has been significant support here as of late. You can see that we have also seen an area which I will call 132.50 as a significant resistance as well, save this little bit of a spike, if you will, a couple weeks ago where we did test the 135 level. It is through this history that I look at this pair and I see also the problems in Europe. We're quite far away from a solution for the entirety of the European problem, and as such, even with the Greeks getting their bailout, a little bit of a sigh of relief here lately, there really hasn't been that strong of a move. And that may be because the Portuguese bond markets, for example, are spiking as well, and it looks like Portugal is next. And then after that, we have several different candidates as well. So looking at the pair and knowing that the U.S. economy is growing and the U.S. dollar is still the safe haven currency of choice for most currency traders, we would have to look at this and subjectively say more than likely we prefer to be to the downside. It's through that prism I look at this and then see the 135 and the 132.50 areas as potential trading areas. On signs of weakness for perhaps a shooting star or a bearish engulfing candle, something to that effect, I will be shorting at either one of these levels. Looking at the pair though, once we get above the 135 on a daily close, it is at that point that I would have to admit that my thesis is wrong and go long. I need to see a nice strong close above it, perhaps even a rise and then a pullback, a retest of 135 to go long. But quite frankly, with the way things have been going in Europe, I don't know whether or not that's going to be likely to happen. So at this point in time, I am looking bearish at this pair, but I have two very specific levels that I'm looking at, and the main reason for that is the volatility the pair has seen lately. With that being said, in a very volatile market, you have to pick your spots out ahead of time and be very diligent as to what you're looking for. So I have three possibilities: short at 132.50 on weakness, short at 135 on weakness, or long on a strong close above 135, which is, quite frankly, the least favorite of the three options.